Hi, thank you for just joining us. If We'll be beginning the webinar in just a minute or two. Thank you for your patience. We're just going to give everyone a chance to log in. All right, thank you for joining us. Welcome to the Miro Consulting webinar on Microsoft License Statement Compliance Mistakes. My name is Sean Donahue, and I'm the VP of Marketing and Lead Salesforce Analyst at Miro Consulting. And joining me today is Miro's Director of Technical Services and Microsoft Practice Manager, Tim Higgins. So if you have any questions during the broadcast, please use the question box in your webinar control panel, and we'll answer them at the end of the session. And please note that if you like to ask a question, we won't say who's asking it, but we'll read the question out to the audience, and we'll try to answer it the best we can. And all the questions, your identity will be kept strictly confidential, so feel free to ask any questions. Before I begin, I'd like to just quickly explain who Miro is. Miro Consulting is a leading global provider of software asset management and subscription management services for Oracle, Microsoft, IBM, Adobe, and Salesforce. We specialize in license management, audit advisory, negotiation tactics, support management, and cloud services. Our mission is to help our clients maximize their ROI on their software license and subscription investments, stay in compliance, and negotiate successful contracts and audit settlements. All right, to begin our presentation, I'm going to turn it over to Tim. Tim, tell us how we're going to avoid these Microsoft license statement mistakes.
Well, thank you very much, Sean, and welcome everyone. Good morning, good evening, good afternoon, wherever you are in the world. Now, many times, often during an audit, organizations will request a Microsoft license statement or an MLS from either Microsoft itself or from their reseller. And by the way, resellers are now referred to as licensed solutions partners or LSPs, but force of habit kind of causes us to still call them resellers. So if I use that term, I mean your LSP. Now, this particular webinar will go into some detail on what the MLS is, what it does, and how it can be used to help establish your license position. Now, there are a few caveats that we will cover, and so we are going to speak to the following topics, right? The MLS itself and what it represents, the main tabs to which you will want to pay the closest attention, and finally, how each of these tabs in the MLS can help you or hurt you. Now, this topic and the report has been gone over many times, but people have come and gone, so we believe it's time for a refresher. Now, first things first. We'll henceforth refer to the document as an MLS because A, that's the more common way of referring to it, and B, it's quicker and easier to say than Microsoft License Statement. And then in a very close second place is our first caveat. The MLS is not a software asset management or SAM tool. It is a purchase history. It reaches all the way back to 1993 for licenses purchased under an open agreement, select agreement, the enterprise agreement, or other volume purchase agreements. This is why when you read through the MLS report, you might see, for example, Windows 95. Um, it does not include licenses acquired through original equipment manufacturer or OEM as part of the pre-installation or uh, any retail package products that are purchased locally or online via the Microsoft Store. Now, in saying that, we also understand that Microsoft has stated that it is working on a method for including these particular purchases, or at least some of them, and we'll see how that transpires. Now, that might be considered the second caveat. Now, it might be easier to follow along if you have your own MLS opened in front of you. While we won't necessarily be going along in the same order as your MLS is in, you can more easily visualize what I'm saying. If not, just pay attention to the screen, and we have examples to which we will speak. Now, of late, there is a tab titled MPSA, or Microsoft Products and Services Agreement. One might think that the MPSA, which as a license volume agreement, would be included. However, that is not the case. The licenses purchased under that agreement appear under the MPSA tab and not elsewhere in the report, as it is manually sourced from the volume licensing field center portal, right? Where the MLS is sourced from a different source. So therein lies what might some consider the third caveat. So to that I say, wow, there are three caveats already, and we're only on the first slide. So let's go into the MLS itself. Now, finally, Microsoft is using numeric customer identifiers to capture the information about the purchases. In times past, not so long ago, these customer identifiers, which were always applied, were not used to determine which purchases were made. Instead, the various ways the company name was entered by the reseller was the dominant factor. This resulted in many, in fact, way too many, false positives and false negatives. And it caused additional effort to straighten them out before any analysis could begin. To get these data points accurately reflecting the purchases, both the organization and the license agreements tab, defined on another part of the report that we'll get to later, need to be scrutinized. Now, I think it's been written that the MLS is easy to read. I'm doing air quotes here. And I guess that might be true if you're used to reading them. But it could be a hassle, especially if you're only reviewing it every time you renew your enterprise agreement, for example, which is probably every 3 years. So Miro has taken it upon itself to read these tabs and produce a very, very easily read spreadsheet that details exactly what the MLS reports. Okay. When we talk about the license agreement tab, we say that this is a filtered tab, and it lists all of the license agreements for the organizations listed in the previously discussed tab, that is the organization summary. These licenses may have the status of active, expired, terminated, or even rejected or returned. Since it typically arrives with its panes frozen, you can unfreeze those panes by clicking on View, then freeze panes, and then unfreeze panes in your Excel ribbon, just in case you do have your own version of the MLS in front of you. The agreements on which to focus are the active ones. That is column D, the agreement status. By filtering on this column, a list of currently active agreements can be produced. Now, open agreements remain active for 2 years and are listed as active even if their agreement end date, which is column J, has passed. So we want to filter on column E as well for only those agreements which are valid, such as our current enterprise agreement or our current enterprise subscription agreement. So what Miro does is then place this information in that very same spreadsheet report, right, that we produce, and the list of organizations and the list of agreements are then sent to our clients for verification. Okay. Again, any extraneous entries here would create false positives, right? Meaning that a license would be listed that is not actually yours. Or false negatives are produced by missing entries. That is, licenses that do not appear that ought to, because you do, in fact, own the right to use. So the verification of this information is very, very, very important. Now, the license summary tab is the primary tab for your SAM program. Okay. Earlier I said that this is a purchase history, not a SAM program. It is part of your SAM program. It is a tool which you can use as part of your SAM program. Now, this tab, the license summary tab, is the tab to which you would refer to as the primary resource during any sort of self-audit. Okay, it provides a list of the purchases made, but in a more easily read format. I'm comparing the transaction tab that we'll get to in just a moment. It includes the license verification, license version rather, and the effective license quantity. Now, we're going to go into some detail here. The top portion of this tab provides two important definitions, and snippets of those definitions appear in the upper right-hand corner of this slide. So let me go into them. The upgrade license quantity, right, are entitlements that appear that exist for products purchased outside a volume license agreement that is covered by the MLS. Okay, or though much more rarely, agreements that were not included because they didn't make it to the source of the report, possibly by the reseller. Right? Now, these licenses are stuck. I'm doing air quotes again. That is, whatever value appears in the license version column is the version at which the software is per Microsoft. Right? It cannot be upgraded, for example, beyond that point. So we see in the upgrade license quantity a value of 2012. That particular license cannot be upgraded beyond that version, 2012. Now, if there is a positive value in the active SA quantity in that column, then there will be no positive value in this column for upgrade license quantity. So typically the products listed with an upgrade license quantity are older versions, which are probably unsupported. Remember that the MLS goes back to 1993 has a purchase history. So, uh, 2005 of SQL Server, for example, is no longer supported. Now, the upgrade license quantity with maintenance, right? Parenthetically, with maintenance, uh, the entries that appear here may exist for products also purchased outside of volume agreement covered by the MLS, just like its counterpart. But there is more to this story. First, many of the entries in this column also have a positive value in the active SA quantity column. Okay, this is because there may have been software assurance applied to these licenses that are not on this report. Okay, it might also be because a concession was granted by Microsoft to permit only software assurance charges to be remitted versus the license fees, and that was often discovered. That situation would have been also revealed during an audit. So that's where that concession comes into play. Note that, please, we are not going into audits or software assurance only licensing at this time. And that's about as much as I'm going to say about that. But back to the definition. The license version under upgrade license quantity with maintenance is typically more current. While this is not always the case, remember that the MLS is a purchase history, right? Positive entries in this column provide new version rights. Of course, just like its counterpart, not every product would be supported. So that upgrade is required. Now, both of these columns can be added to the effective license quantity column, which could be vitally important, especially during an audit, provided there is proof that the underlying license is intact, and that proof is in the form of one of the forms that are acceptable to Microsoft, such as a paid invoice, product keys, or whatever. And by the way, this is also a filtered tab. Now, we're going to linger on the license summary tab in order to reveal what may end up hurting your organization. And this is specifically around some of the more expensive licenses that you can purchase. And thus, that maximizes your exposure if you're reading the MLS incorrectly. I'm talking about Windows Server and SQL Server. Now, this is where the rubber really meets the road, and why you might need experts to help you unpack all this information. Right? We're looking at the Transaction Data tab and filtering on the licensed product family for the active agreements. Okay. As an aside, what we're looking at here is a smaller environment. This is where these examples were taken from. This has literally hundreds and hundreds of rows in this tab. Right? A larger one might involve thousands of rows. In the case of one of Miro's clients, that tab, the Transaction Data tab, neared some 20,000 rows. So refer to this tab at your own risk, quote unquote, even if it does show the truth as Microsoft believes it to be. Now, let's first refer to Windows Server to establish a baseline. If you look here, you will see that this client had purchased some 64 licenses at one time and covered them with software assurance as part of the then current enterprise agreement. Shortly thereafter, the client stepped up 24 licenses from standard to data center. This left 40 entitlements. Now, before we go to the next slide, there are two things to point out. Notice the two in the product description. This is the indication that the licenses that are reflected here are two packs. In other words, they cover two cores. Notice also the SA and the SASU in the two rows under product description. This is how we know that the products were purchased previously and had software assurance, SA, on them, and how a portion of them were stepped up, SASU. Right? Now we'll turn our attention back to the license summary tab.
Tim, before you jump to the next tab, can you just adjust your microphone a little bit? We're just getting a little bit of brushing sound. Thank you.
Okay. You're very welcome. Now, notice how both the 2LIC and the SASUC do not appear in this tab. That's because the value under license product family is listed. In other words, this is not a product. Rather, it is a family of products. And this is derived from the transaction data tab, where there will be a one-to-many relationship between a product, i.e. product description in column L, and its family, or that is the licensed product family that appears in column J. Notice also how Windows Standard Server Standard Core is reported to have 80 entitlements. This corresponds with the transaction data tab. 64 entitlements minus 24, which were stepped up, right, equals 40. Now, multiply that 40 by the two licenses. Remember, 2LIC from the transaction data tab, and the result is 80. Cool, huh? Well, that is cool only from the arithmetic perspective. Now let's return to the transaction data slide. Okay. Now we're focused on the SQL Server Edition. Okay. When that same enterprise agreement was renewed, there were 6 entitlements for which the software insurance was part of the renewal. Okay. We see SA in red listed under the product description. There was no step-up performed for any of these licenses. I guess you'll just have to take my word for that. And while not shown here, it couldn't have been, because on licenses for which software assurance was not active, it's impossible, because stepping up is, in fact, a software assurance benefit. And there are the same abbreviations listed, right? As we said, the SA and the 2LIC, that means that these licenses are 2 packs. Right? However, when we revert to the license summary tab, we see 12 listed as the effective license quantity. Just like Windows Server with the 2LIC being missing, the entitlements listed here are actually double the number of licenses. Let me repeat that. The entitlements listed here are double the actual number of licenses. That is 6 entitlements multiplied by 2 licenses. Remember the 2LIC from the transaction data tab, and the result is 12. But that is misleading, because according to the product terms, a customer may not and is not licensed to use the products to separate the software for use in more than one operating system environment under a single license. So the question now is answered, right? For Windows Server, the client owns just 40 licenses, and for SQL Server, this client owns just 6 licenses, which is half the amount that the license summary tab reports. Now, imagine yourself in a situation in which you believe you own 40 licenses of Windows Server and you deploy that number, well, you would be out of compliance for 20 licenses, and that exposes your organization to nearly $2,400. Phooey, you say, right? What's $2,400? Nothing, probably. Probably, admittedly, nothing. But what about SQL Server? That exposure is closer to $24,000, and that's just for 6 licenses. How about we increase that number? And now we're talking money. So it pays to really read the MLS correctly, or, like I say, have someone do it for you. So I've left some time for questions. If we have any, I will turn it back over to Sean, and he can organize that.
Thank you, Tim. Very informative, and you have a very good point there. This can be easily misleading in many ways, and we recommend that get the peace of mind and have a expert look at your MLS statement and make sure that you're reading it the way that Microsoft expects you to read it. So the first question is going to be, in the MLS, the license program, what is PIP and SPLA?
Oh, okay. SPLA stands for Service Provider License Agreement. PIP stands for Purchased in Product, right? That is those are separate agreements. One is referred to as a SPLA agreement or a service provider agreement. The other is referred to as an OEM or ESL, embedded software license.
Thanks, Tim. And again, if anybody has any follow-up questions to your original questions, feel free to ask a second question in the question box. The next one we have is, how do we actually obtain an MLS?
Oh, that's simple. You just request it, either from your reseller, now referred to an LSP, like I said, or directly from Microsoft. However, you probably want to be ready with the rationale for requesting one. We are conducting an internal assessment, is one such excuse.
All right, thanks, Tim. And I guess I'm going to skip one and come back, but this is a pretty good one, just related, is how much does an MLS cost if you do request it?
It should cost you absolutely nothing as the user, because this is a method of determining your license position. It should be delivered within a couple of days after you request it.
All right, we have a little bit of time left here, so I want to have time for 2 more questions. If you haven't had a chance to get your question answered, we will get back to you after the webinar and answer your questions there as needed. Let's see, we do use the MLS as a SAM tool. You're saying we shouldn't do that. Why should we not do that?
Well, as we mentioned, the MLS is a purchase history reaching all the way back to 1993, but it only includes volume purchase agreements such as the enterprise agreement or open agreement. But it does not currently include, at least currently, any licenses acquired through the OEM or retail channels. And you as an organization might find it less costly or more expeditious to purchase those licenses through those channels. Now, that said, if you've never, ever swayed from an enterprise agreement or an organization that runs with an enterprise subscription agreement, you just may get away with using the MLS as your SAM program. But our experience here at Miro is that such a state is rare. So keep your SAM program accurate, and to do that, we would recommend using it as just one tool.
Makes sense. All right, we have 3 now. I'm going to get one more question just because I want to make sure that everyone in the audience really gets a chance here. Basically, it's simple. How accurate is the MLS statement in general?
Well, Microsoft, first of all, let me say that Microsoft relies on the reseller or the LSP to populate the portal from which this MLS is sourced, the Volume License Service Center. But Microsoft actually puts a disclaimer right in the MLS in its FAQ and glossary tab, stating that there is a 45-day period between the date on the report, the date that the report is generated, and your last purchase. So in this case, some of your entitlements might not appear. So there's that. Plus, as I said, Microsoft makes it the resellers responsible for updating the source data, right? If they're remiss in adding it, if they add it, slowly, if they add it incorrectly, then those entitlements might not appear on your MLS. This is why we require or request or urge, I should say, all of our clients to use a reputable reseller and to check the MLS on a regular basis, perhaps annually or semi-annually.
All right, perfect. Thank you very much, Tim. We ran about 2 minutes over, so that's not bad. Again, if we didn't get to your question, we will get back to you after the event and answer it one-on-one. Again, thank you for joining us. If you have any further questions or you'd like to request a one-on-one session, please email us at sales@miroconsulting.com. Call us at 732-738-8511, extension 1208, or visit us online at miroconsulting.com. Again, thank you for joining us. This concludes the webinar. Have a great day.